All right, guys and gals, back to work. Hope you guys had a restful weekend. Big week ahead of us. And I'll tell you, a lot has changed since the last time we spoke. End of the week last, we've got that beautiful breakout pullback after non-farm payrolls on Friday. We talked about that last week. But now all of a sudden, these hourly charts are flashing big time reversal signals. And I'll tell you, if the buyers, if they don't get their act together, we might be in store for a big time crash coming here with that election only a few weeks away. Now, I have a handful of trades I'm tracking to capitalize on what seems like a big bearish reversal. We'll cover all the entries, the exits. I'm going to give you guys an easy roadmap so everyone has a game plan to make some money tomorrow as well. So charts are all prepped up. Enough of the intro. A big week ahead of us. Let's go make some money on Tuesday morning. Charts are ready to go, as you can see here. Nasdaq triple Qs are all ready. The E-mini and the SPY is ready. I have three important clues here right now that are telling me where the winning trades are waiting for tomorrow. One of the big clues is right here on these hourly charts. You know, we had this bull market up in the end of the week last week. We had the bull market into a trading range. We talked about how last week, if you recall, bull market into a trading range, we mentioned how we'd have to go lower first to get this market really ripping higher. We did not get the price going lower, like I mentioned at the end of last week. We did get that breakout pullback. Fantastic trades on that breakout pullback we talked about last week. But now you'll notice, now the market now is rolled over off the highs here. And this is why I said earlier, we're seeing some big time reversal signals showing up on the hourly. We have now the amount above that range, projecting now back below that range, above the range, below that range. This chart right now is a nightmare scenario for any buyers right now, because we know that ranges love to rotate. As they rotate off these highs, the S&P now, S&P SPY, looking at that 5690 area. Nasdaq rotation off the high, looking at that, 615, 620 area down below. So very big clue here. One of the most important clues of the month this month here. This is only one of the three important clues that are kind of tipping us off to the best winning trades for tomorrow. I have one more important clue here on the schedule for tomorrow. We have no major news tomorrow and really no major news on Wednesday. We don't have any big news this week until we get that CPI report coming out on Thursday morning. Now, obviously, everybody knows the CPI report is the top of the food chain as far as the big news right now, right? Everyone wants to know. The Fed's been telling us the last few weeks they're no longer worried about inflation. So this is their chance to prove it to us. The big clue right here, though, is we have no major news on Tuesday and Wednesday. That might lead to some puckering up of the markets, right? And some nice range-bound markets for tomorrow and Wednesday. So ranges are certainly on my radar for tomorrow. I love range markets. That's a good thing for us. And we'll talk about why that's important here in a moment. So we've covered two important clues. One clue in the 60-minute time frame. One clue on the calendar for this week. The final clue here is on the tick charts, a faster time frame. And this is where things kind of get interesting for tomorrow. One big clue here on the tick charts. You'll notice all the time frames, by the way, upper left-hand corner. I always trade tick charts. Tick charts make pattern recognition a whole lot easier. And if you're watching for the first time right now, that is the 21 EMA. It is pretty much the only indicator we need to find lots of winning trades each week. So 60-minute time frame is flashing big time reversal signals. No major news until later on in the week here this week. And then we get the final clue. Bear move down into a trading range and a breakout of that trading range. Now, if you watched last week's video, last Friday, we got that beautiful breakout pullback, right? Range, breakout, pullback. If you were here last week, you know that, and a lot of you folks made some pretty good money. Same basic idea here right now, right? There's my trading range. We got that bear move down. I would like to look for a breakout pullback. Now, breakout pullbacks are going to give us three potential trades here for tomorrow. Let's talk about the entry tactics on this, because a lot of people, they know what breakout pullbacks mean, but think about these three trades here to profit from a breakout pullback. The first one's very simple. I want to get that breakout pullback into the underbelly of that range. Now remember, I don't have some magic indicator. I can't just blindly sell right there, right? I have to wait to trap in some buyers. I always look for that failure pattern. Wait for the pullback, then don't just pick a top on this, and don't waste your time on divergent signals or MACD crosses, things like that. What I do is I use that failure pattern I teach in the free video course. Let the buyers try once, let them try twice. Now why twice? Because now I know where your stops are. See, if you're trapped long, you sell your way out, right? These failure patterns, I call them, are easy ways to time better entries on that breakout pullback, right? Now, where's the market want to go? In a breakout pullback, it wants to go back and take out that low again. So that's the first pattern. The second trade I'm looking for is technical bull trap. Now, bull traps are very, very simple. On the way down to retest that low, I want to see a lower low in price, and I want to see a nice, strong red signal candle coming in right off of that prior high, right? Makes sense, okay? In the free video course, I call these bull trap patterns, or basically a technical trap pattern. So first entry pattern, 3 trades I'm watching for a breakout pullback. The first one is a failure pattern. It's a 2-try failure. 1, 2, trap the buyers in, run their stops for run back down to retest that low. The second one is not as easy as the first one, but it's pretty simple once you learn it. It's a lower low in price. And again, I want to get just a little bit above that prior high. Nice strong red candle, closing below the 21 EMA. That is a bull trap pattern. Now, third trade. Think about this. If you sell that failure or you sell that bull trap, where's your target? Your target's probably back to retest that low. Is this a good place to sell short? No, it's not. It's the last place you want to sell short. So this is what we look for, a bull trap, or as I would call this, a crown reversal pattern. Now watch closely. I'm not going to pick a bottom on this, right? Stop going all in, picking tops and bottoms. Very difficult to get lucky picking tops and bottoms consistently over a long period of time. Much easier to trap the bears in once getting short, higher high, twice getting short. Now watch how this pattern sets up. It's a higher high in price. Why higher high? Because sellers want to sell high. As it goes higher, I need to attract in more sellers. So now I know their stops are sitting right above that high. Remember, if you're caught short, you get stopped out of a short trade, it squeezes those stops, it makes sellers become buyers. That's why higher highs are important on a reversal trade like this. Now, one more thing here, right below that low. I call these crown reversal patterns because the reversals right off of that low. Strong green candle, closing above the moving average, and my target on this is always the same. It's always to go out and take out that recent high. So leave a runner on the way higher. So again, 3 trades I look for when it comes to a breakout pullback. Look for that failure pattern 1, that bull trap number 2, and again, basically a bear trap pattern. I call these crown reversals off of that low. Now, I know that most of you guys know these patterns already. I get a lot of emails every week. You guys making money with failures and trap patterns. But let's slow down for a second, because if you're watching for the first time right now, this might be a brand new language, a brand new strategy that you want to learn. Don't you worry. I teach all this in a lot more detail. I have tons of examples of failures and traps and crown reversal patterns. I cover so much more of this stuff and a lot more examples of these inside our free video classes. What I'll do is I'll put a link up top here for you. Upper right-hand corner, grab that link that popped up there and take that free trading course, because the strategy I teach in that video series will teach you a simple trick we use in our members trade room that tells us where the winning trades are going to be each morning. More importantly, I want to teach you my 4 favorite entry patterns, help you time better entries and start making more money. Guys, the bottom line, the markets are way too good right now not to be making consistent money. If you're tired of missing the best trades, if you've lost your confidence in your current trading strategy, hit that link that popped up there, take that free course. Everyone loves the free video series. It is perfect for anyone who is serious about making money in these great markets. And also be aware too, I'm going to put all the important links we talk about tonight. I'll put all the details you'll need in the description of the YouTube video. Start first with the free video class. Don't forget to, we trade together every morning, 8 o'clock Eastern time in our trade room. I'll put trade room membership links down there for you, the description. And also keep in mind too, I post a lot of updates on Twitter or X as they call it these days, charts, videos, mindset stuff. If you're on Twitter X, give me a follow again. All the details you need to learn more and hopefully earn more are all included down there for you inside of that video description. So big bear clues right now on the hourly chart. And I love the idea. I love the idea of that breakout pullback off the underbelly of that trading range. But I mentioned earlier that we don't have any major news until later on in the week. We may get some ranges for tomorrow, and we probably also won't be ready for some variations of these trades. Let's talk range market. Let's talk variations of these. Let's talk Nasdaq here. If you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this link with other trading friends. Guys, that small action takes no time for you, but makes a huge impact on my channel because YouTube, believe it or not, rewards me every time you like, share, and subscribe. So I get it. I know we're all busy people these days, and I appreciate you guys spending a few minutes with me here every evening on these videos. So thank you so much for the likes, subscribes, and shares. Thanks for your support. Now, let's talk Nasdaq here and those variations I mentioned earlier in the video. The Nasdaq, again, boy, a lot has changed here in the last, 48, 36 hours. We had that big bull run up. We still do for the most part. We had that range going lower. And like I mentioned earlier, usually in these scenarios with an overall bull market and a bear moving a range like that, we usually have to go lower first and then slingshot back up again. And that's what kind of produces that run back to retest the high. Again, we talked about this a lot last Thursday evening on the final video of the week last week. Well, now things have changed, right? Now we didn't go lower first. We went higher first. And so now, even though we got that nice breakout pullback we talked about earlier on the S&P, now this thing looks ready to roll over. The buyers, if they don't get their act together right here, we might be in store here for a big pendulum swing and a big crash. Of course, that big election coming up in less than 1 month's time right now. Incredible how fast this year has gone. So same, big red flashing lights on the 60-minute time frame right now. What does the tick chart look like? Tick charts make entry timing a whole lot easier. And you'll notice right away, there is that bear move into that trading range and that breakout going lower. That a breakout pullback would be a very productive way to trade this tomorrow morning. I gave you guys 3 of my favorite entries for tomorrow. But let's talk about some variations of this, right? Because we can plan for the perfect stuff all we want, but the markets are messy, especially ahead of an election coming up later on this year. Let's talk about variations. I mentioned earlier that I would love to get this price to go up, trap the buyers in once, twice, and use their stops to run back down to retest the low, right? That's kind of the ideal scenario to sell off that high. But you know what? A lot of times though, we get stuff like this where it V-tops, it runs up and comes crashing right back down again. So what if we run up and this thing just crashes right back down again? If we see a V-top, usually when markets V-top like this, it begins to grind down. And when it grinds down like that, that's always an easy giveaway. If we pop up and get whacked right back down again, watch that grinder going lower. What I'll do is draw a trend line off those lows. I'll bring that trend line up around those highs. See that? Makes a channel. Now, very important, look left. Find one of these prior swings. Find one of those prior swings. What I want the first test off the high of that channel, right? The first test is always the best test. Now, this could be a bull trap. Like I'm showing you here. We also see a lot of failure patterns because once price goes above the moving average, buyers will come in, try to get long. We can again use their stops to trigger that move going lower. I love to run stops. I love to trap in buyers as they get long off the moving average and sell into their stop losses. Same idea here, right? Same idea right there. Trap those bulls in above the moving average, right? And sell back down where? Back down to retest that low. So again, this could be any of the entry patterns you guys are learning in the free video course. I love traps and failures. Failures turn to pullback combinations. Again, this will make a lot more sense once you guys are in that free video series I mentioned earlier. All right, so one variation of this is a V top. It runs up and gets whacked back down. What you don't want to do is you don't want to chase after it, right? Because it'll almost always pull back right around the top of that range, the top of the channel there. Get that first test short off the top. Any of the entry patterns you guys are learning inside the free video course. Another common variation is we see a lot of these in our trade room. We'll oftentimes get that strong pop up. We'll get these buyers trapped in. We'll get a nice winning trade, one try, two try, and the market will try to run lower there. But for whatever reason, oftentimes we get another leg going higher. So again, this is a winning trade. We always go 1-to-1. You'll learn about trade management in the free video course, but I always use a 1-to-1, right? So stop to target down below. It's a winning trade. I'll move that stop down to point of entry, get rid of all that risk, right? Lock up that reward. So it's not a losing, it's a winning trade here, but for whatever reason, the buyers come in and they try to run this thing back up again. Now, again, we're probably still overall bullish right now. I wouldn't be totally surprised if they rip this thing, reverse this thing all the way back up again. And we'll cover that tomorrow morning in the trade. It's a little bit too much to go over here right now. What I want to say to you, though, is that if we go back to retest the high, right, is this a good place to be buying? No, you're buying high, right? You don't want to buy up there. Anyone who buys down here, by the way, will probably take their profit where? Up around that high. This is the last place you want to be a buyer. It's a great place now to trap in some bulls. So if we see one of these, what I call a double bottom, a double top retest. In other words, right, it's basically a bull trap. It's a buyer failure that makes a bit of money, right? But doesn't run all the way back to that low. It winds up running back up and retesting that high. Now at this point now, do it again. I'm not going to pick a top on this because it may keep going higher, right? I can't do that. That's a rookie mistake. What I'll do is I'll wait for the buyers to pull back, let them try a couple times, and once those bulls commit, remember lower lows, right? Always lower low, lower low. Why lower low? Because lower lows attract in more buyers. And the more buyers we have here, now I know where your pain is, right? Now I know where your stops are. Now I know where those buyers turn into sellers, right? That's the trick. That's why running stops, in my eyes, is the easiest way to make consistent money, no matter what market or time frame you're using. So again, this is that same failure pattern. And then as we go lower, it's always going to be that trap combination. Remember, trap combinations are simply lower lows in price, move right above that prior high, a strong red candle closing below that 21 EMA. I teach all these entry rules and a lot more examples of this stuff inside that free video course. Remember, the target is back to retest that low, and that same crime reversal pattern, bears once, bears twice, I mentioned earlier on the S&P chart, can be applied once we end up back around that low once again. All right, guys? So again, these double top retests are oftentimes a gift, in this case, to sellers. Now, again, it may run higher, and if it does run higher, we'll talk about that tomorrow morning in the trade room. A little too much for me to cover here, anticipate here on this YouTube video. Now, one last thing here, one last variation I want to talk about. I mentioned earlier that we don't have any news here until Thursday. So we may wind up seeing these markets duck and cover in the fetal position here until we get that CPI report coming out later on in the week. That's a very big clue too, because it really changes the dynamic of how the market works. I'm not sure, by the way, that this will be the new range for tomorrow, but I will be keeping an eye out the rest of the week here until we see CPI on Thursday morning for ranges in the morning session. The most important thing you want to learn about ranges is that ranges act like magnets and they love to rotate, all right? So ranges act like magnets and they love to rotate. If we go higher and then back down again, we're going to use the same thing, right? The measure amount above, measure the amount below. It's no surprise we found that bottom on the other side of that range. Same thing applies. Above, right, down, down below. And by the way, that knife cuts both ways, right? If we end up going lower first, then back higher, that knife cuts both ways. The amount below the range, the amount above the range. These will be levels of support and resistance. I also look for things like triangles, expanding triangles. They love to rotate, ranges love to rotate back and forth inside these expanding triangles or these megaphones. So the reason why this now is very important is because if we get a range tomorrow, if we wind up going sideways here in a range ahead of that CPI report on Thursday morning, if we get that run going higher now, okay, very, very important. A small difference is a big difference in this one. If we go higher here, I still like that same entry pattern, right? I still like that one, that two try failure into that, what's it called again? That, in this case, bull trap pattern, right? Lower low in price, above that high. I still like those trades in this situation. But remember now buying that low, the idea of buying that low now is not nearly as attractive now, because now what's going to happen now? Now the amount above that range, see what I'm saying here? That will bring us down below now. That becomes our target. Now the reversal pattern, see that? Now the crumb reversal pattern is down here now. Now this is where you apply, or what I'm looking to apply, that reversal. That crown reversal pattern is a higher high in price and a move right below that low. Now remember, right? These things love to rotate back and forth. So a range rotation is always very important. It's the same basic buyer failure pattern I mentioned earlier, the same basic bull trap as we covered earlier. But now the difference is, though, we start to leverage now that rotational aspect on top of that range, and that puts us now around that pendulum swing on the opposite side, right? So a lot is the same, but a little bit of core differences there, key differences there. I think that makes sense. Where things get a lot more interesting, of course, is we go lower first. If we wind up going lower here first, again, range market. Again, I don't know if this will be a range tomorrow, but if it is, your game plan is ready on this. If it goes lower first, now once again, it has to be that bear trap. It has to be that crumb reversal, that one, that two, right? That higher high in price, and that move there. Now, in this scenario, we are fighting against a lot of bearish momentum. For me tomorrow, this will be a half size position, a quarter size position. If you're not making money going with the trend right now, might not be a better to sit that one out, right? Whenever I'm fighting against, it's one thing, by the way, it's one thing to have the price go up and then back down again, because I can measure that, right? I can measure that, right? Makes sense? It's a much more aggressive trade, by the way, if we go range bound and then go lower first. That buy off that low is a lot less reliable because, again, all of this bearish momentum we're seeing and that big clue on the hourly. I like the trade, but again, because it's going to be less reliable, for me personally, right, it will be a half size position or a quarter size position. Now, remember, at that point now, we know where the market wants to go. Get that green candle above the moving average. We know it wants to go back other side of that trading range. That creates your target. And then once again, as it rotates higher here, I'm not going to pick a top on that because we may get that big slingshot reversal that we talked about in last night or last Thursday night's video newsletter. Now, if it does that, right? If it was to bear trap off of that low and really begin now to crank and grind going higher, if we start seeing this, and again, we'll cover this more tomorrow morning, but if we break through that pendulum swing and this thing just keeps on going and going and going, now we look for that typical breakout pullback once again, right? So breakout pullback would be breakout pullbacks of the top of that trading range. That's a pretty big ask though. Right? See that this market really needs to rotate hard off that low and really give us a convincing break and follow through that pendulum swing. At that point, it becomes a two-legged pullback with a bear trap below the low. We'll cover more of that tomorrow. Don't you worry. In our trade room, if we see something like that tomorrow, we'll cover that tomorrow in our trade room. But in the meantime, though, right? If we don't get right, if we wind up pendulum swinging off of that low, back up again. I apologize for doing it again here right now, but if we wind up going lower first and swinging higher here second, this rotation aspect is very, very important here. We're not going to pick a top on this. we'll use that same classic failure pattern. 1 try, 2 try. Guys, once you learn what works, just keep on using it over and over again. So buyers once, buyers twice. Why twice? I want the stops, right? I want those stops to get hit with a failure into a trap combination, failure into, in this case, a bull trap, lower low, move above that high there. That's a pretty easy one, right? And again, you know where the market wants to go. It wants to rotate back down the side of that trading range. Once we get that rotation off the high, back to low again, then once again, much easier now to trap in the bears, squeeze stops, and run higher because again, we already know how big the move above it is. We can project down below it. It's a lot more reliable trade than simply trying to buy this thing as it goes lower. All right, guys? Hope that makes sense here. So now we've talked about some range variations, some V tops, some double top variations, and now we're ready for anything this market throws at us for tomorrow. So that's a game plan on my mind for tomorrow morning. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, guys, come trade this stuff with us. The best way, the easiest way I know to start making consistent money in these markets is to learn and trade along every morning in our trade room. Once again, I'm going to put all the important links you'll need to get started. Description of the YouTube video. Start first on the free video classes. Upgrade and come out and join us in our trade room at 8 o'clock Eastern time. Any questions, any comments, concerns, any trouble getting access to our video classes, you can always use live chat or call the office if you want help along the way. All right, guys, boy, a fantastic day today in the trade room. Hope you guys made some money. The game plan's ready for tomorrow. Hope you learned a bunch tonight. Hope you use this knowledge to earn a bunch tomorrow. And hopefully I'll see you sometime soon. Trade with us, 8 o'clock Eastern time as a member of the morning trade. In the meantime, be well out there. Be nice to each other. And you better be here next time, right? Adios, amigos. Bye for now.